the market.
Okay, yes, we must keep our eye out on Infosys and the trades that are happening there. But we have Mithil Pradhan, Mayuresh Joshi, Shashi Bhushan MR and Hemendra Hazari joining in now for the closing chat. So we will go across to all of them. Gentlemen, afternoon to all of you. Mayuresh, I'm going to start off with you. UltraTech Cement, that one surprised as far as profitability is concerned. It was not as bad as some of its other peers like ACC. Is that a stock that you would recommend investors to buy?
Afternoon, Sonia. I think clearly, yes, at lower levels, we did like UltraTech Cement, and yes, numbers were extremely encouraging. So I think it did beat our expectations on the EBITDA front, on the EBITDA to ton basis, and even on the bottom line. So clearly, I think the benefits of lower power costs are seeping through the bottom line for UltraTech, and clearly, I think the beat has been an all-round show. So I think we'll understand in greater detail what the management has to say about the performance and the sustainability of the performance, specifically with new units added in the Rajasthan of 2.6 MTPA, what happens with its star unit in UAE of around 3 MTPA, and what kind of synergies would drive the stock going forward. So clearly, I think it has exceeded our fair value estimates that we currently held with the movement that we've recently seen on the stock in the last half an hour. But clearly, I think post the management call, I think we might revise our numbers. But at the current juncture, probably I think it is fairly valued on an EV to ton basis close to around 190, 195 if I'm not mistaken.
Okay, Shashi Bhushan, good afternoon. It's going to be all about Bangalore tomorrow. What about Infosys? What are the expectations, and what's your call on the IT space?
Well, there's a lot of expectation thanks to the build-up which has happened in the last 1.5 years of Mr. Bajaj's regime, and very much, the anticipation is high. Essentially, it may not be too much of a deviation from the analyst expectation out there, and also that we need to give change a little time. So one could be expecting a flat detail to come out tomorrow, and should not at least as we see, it should not be extensively counted on the higher side.
Okay, well, we don't have to wait too long for that, but we have Hemendra Hazari also joins in. Hemendra, the talk of the day has been the way Federal Bank has, collapsed post its numbers. But would it really concern you, or do you think it's just a 1 or 2 quarter aberration and one should perhaps look at this as an opportunity to buy into Federal Bank?
See, normally the consensus in the market has been that, private sector banks will perform much better than PSU banks. And my argument has always been that if the economic environment and the corporate environment the situation still remains acute and corporate performance is deteriorating, therefore one should expect that even private sector banks should report larger NPAs and should have a knock on earnings just like government banks are. But sadly, the market has yet not woken up to the fact that the private sector banks seem to be operating in some other country and not India. So my point is that one should expect a deterioration in asset quality, a very sharp rise in provisioning in all banks. And I think the market is, tends to be overly optimistic that the private sector banks are immune to the broader economic slowdown.
Okay, Mithil, a word on the Nifty. It's seen a non-stop rally from the middle of the June series. Is it good time to book profit, or would you stay with the long positions? Or bigger question, if someone has to initiate a fresh position, what should that position be?
Okay, I am very, very bullish. So of course, booking profits is something that I'm not going to recommend. But look at it this way. Nifty has formed a higher high, Bank Nifty has formed a higher high, but then when you go and look at the sectors, so let me talk about auto sector, the BSE auto index. It has not formed a higher high, it is moving in a parallel downtrending channel, though of course from a long-term perspective it is bullish, but still from a short-term perspective it has not given a breakout. Number two, you have PSU banks which are not offering any support. You have IT which has not clearly broken out or created any higher high. The strength that is coming from the market is again those Asian Paints, Pharma, or the defensive HUL kind of names. Of course I'm bullish, but then I am looking for a breakout in all of these sectors as well. So that will give me much more confidence to buy further and in specific names. So far we are building positions from a buy on declines perspective, but not extremely aggressive at this point of time.
Right, so you are building positions and you are very bullish, as you said. So what are the stocks that you would recommend investors buy? Because even if you look at, some of the broader market names, you have names like Ashok Leyland, Dish TV, Syntex Industries, Dabur, many of them hitting fresh highs today. So on the charts, what looks good now?
Well, again, I would like to stick to the sectors which are already outperforming the market. So of course we are looking at stocks like Cipla, we are looking at stocks like Biocon, which I've been very bullish on because it has given a very long-term breakout. So that is one stock I would recommend. HUL is again buy on declines. We will keep buying on declines as long as we see that the symmetry is not broken, which is not broken as of now. We are looking at housing finance names like LIC Housing. We are looking at GIC Housing. Those look good. And the point that I would really like to make is the first the index that broke out above a new high was the mid-cap index, and it wasn't the the Nifty or the Bank Nifty, nothing of that sort. It is the mid-cap index which is actually driving the gains and the public sentiment towards the stock market. So I would suggest look at only mid-caps right now. They are showing an absolutely great outperformance on charts against Nifty, against Bank Nifty, and that is the way to go forward.
Okay, Mayuresh, we've seen a lot of stock-specific outperformance from the index. Asian Paints, how do you trade this one? I mean, it's one of the most expensive stocks, but it keeps getting more expensive.
Afternoon, Anuj. Clearly, I think the valuation premium that Asian Paint derives sustains itself on two counts. I think the kind of earnings that Asian Paints boasts, leave aside a few quarters in the past few years because of the economic slowdown. Clearly, I think being a market leader in a decorative paint segment, and once you're talking about an economic revival happening, I think it will be a key beneficiary. On the second count, I think with the kind of capacities that it has added over the last few years, I think that utilization level, along with improvement in the industrial and the automotive business, I think that probably augurs well for a stock like Asian Paints. So yes, I think valuations, as we discussed earlier as well, are a little bit of a headwind, but again, I think it's always traded at a premium. So clearly, I think valuations are here to stay at a huge premium to the other FMCG counters, and specifically within the paint space. Asian Paints is something that might outperform its peers over the next few years, but valuations again play prompt when it comes to an analyst perspective. So clearly, I'll wait for declines onto this counter, because at the current juncture, I think it is pricing in most of the positive, at least from an FY16 perspective.
And what is your own view, Mayuresh, about what one should be doing with some of these private sector banks like Federal and DCB post numbers?
So clearly, I think we always had a bias towards the larger private sector plays, and I think that bias stays. So I think Axis, ICICI, HDFC Bank is something that we'll still be comfortable parking our money in. Clearly, based on the fact that the asset quality is expected to remain extremely stable. ICICI's management has indicated that FY17, 16, both these years will be extremely beneficial for the banks, both in terms of how the asset quality will pan out and how the credit growth will pan out. So in lieu of all this, I think the credit costs remain subdued for a lot of these larger private sector banks, and with operating leverage benefits coming through with the large CASA base, and clearly I think with the good capital adequacy to support them, the return ratios are extremely supportive, even if they're trading at higher valuations compared to the PSU part. So yes, I think the bias stays, but it stays with the larger private players like an Axis, HDFC and an ICICI.
Okay, so Mithil, in terms of individual mid-caps, what are the good trading ideas right now?
Well, the best idea is Arvind, of course. That has been my all-time favorite. It has cleared the resistance around 295, and even since the morning the market was down, but Arvind was trading with gains throughout the day, more or less. So Arvind is my best pick as of now. That is what I will recommend. There is one more stock that I've been looking at, which is PVR, because media stocks as a whole are doing very well over the last few days. Now PVR has been creating a kind of a rectangle for the last, I don't know, maybe about a year or year and a half. That breakout has happened. The target immediately that I get is about 900, 930 odd levels. It is still trading at about 800, so there is a good opportunity to go long on this stock.
Okay, yes, in fact that stock has moved up substantially. It's up almost 25% in the last 12 months. Shashi Bhushan, you were telling us about Infosys, but what about a stock like HUL? That one has been reporting single-digit growth for the last many quarters. Demand has been sluggish, and ahead of its earnings tomorrow, it is quite weak. How would you approach that name?
Well, I think the challenges are pretty apparent. The big ones are growing really big. there will be always a challenge in terms of quarter to quarter growth numbers for the second line IT stocks, and I think this is fairly visible in the way they brought up the numbers. One would definitely want to stick to the larger caps for this season. And as as I heard another panelist just now mentioning, even the IT sector is one sector which has generally not been seen the valuations which a lot more other sectors have seen. So one would want to stick to the large cap IT companies just now.
Okay. Hemendra, a word on Dish TV, the kind of re-rating that we are seeing on this one?
Yeah, I'm not in a position to comment on Dish TV, but just broadly, on the Nifty, if you see, in the fourth quarter of last year, the Nifty sales declined. Now, if by the first quarter of this year also Nifty reports a decline in sales, then officially we are going to be in a recession in corporate India.
Okay.
I think a lot of the analysts also community expect a very flat performance in first quarter. I think what is not realized is that once you look at the data for the Nifty or for the broader market, things are not at all good. And that is in general what's happening, and that's why you will see that top line is going to be a major issue in this first quarter results.
Okay, I don't think that is deterring a lot of people. Just take a look at the chart of BPCL. There's a sudden spike up that we've seen in the last 5 minutes or so. So it looks like some last ditch attempt to buy that stock before we end the day. So BPCL, the chart of BPCL should just come up for you. There's big volume action there. And I think it's a fresh high that BPCL is sitting on. So this continues to be the big story. I don't think we have, we have a couple of minutes before we wind down for trade. 2 more minutes to go. Mayuresh, what are your thoughts on this space, the oil marketing companies? Would you advise any fresh positions here, or do you think the story has played out completely?
So largely, Sonia, I think if you talk about numbers specifically on the next couple of quarters, I think a lot of discounting would probably take place in terms of how the price of these stocks have moved up. So fall under recoveries, the debt levels going down, which implies interest costs go down substantially. It improves their cash flows going forward. If really one has to make an assumption of oil staying within the range between 50 and 70 for the better part of this fiscal. So clearly, I think what it boils down to going forward would be how diesel marketing margins play out for a lot of these players, how they implement that and how it plays out. And secondly, I think for a lot of companies within the space, specifically BPCL as a case of point, I think how the A&P part plays out is going to be extremely crucial over the next few years. So I think the kind of capex that they put in and the kind of back-ended returns that is expected to come through over the next few years will be a key and pertinent issue. So yes, I think the momentum might continue with these stocks with good numbers expected to come through for the next couple of quarters. But clearly, I think one really needs to understand how the overall part of the business is moving on. But yes, I think the sentiments will be positive for most of the OMC companies, including BPCL.
Alright, 50 seconds left for market closing, so let's just do a quick recap. It's going to be a slightly down day as far as the frontliners are concerned, though the market did recover from intraday lows of somewhere around 85.60. It would end somewhere around 8600. Stock of the day today from the index really was Ultratech Cement, up 4% and moving within 1% of a new lifetime high. So that was some achievement for Ultratech Cement. Ahead of numbers, Asian Paints looked good, up 3%. As Sonia just pointed out, BPCL was up 2.5%. Then of course we had stocks like Idea, Hindalco, Mahindra and Mahindra doing well. The curious case really was Infosys. That saw big intraday recovery through the day and ended almost near day's low. So really it was a lot of fun and games taking place on Infosys. TCS on the other hand excuse me, was relatively much more stable counter. That stock was up in the green. On the losing side, two PSU banks, PNB and Bank of Baroda, were down almost 3% each. Tata Power was down 2%. KN India head of numbers down 2%. Tata Motors, well, sub 400 now on that stock, down 2% again. And Lever was down about 1%. But the story of the day was not in the large caps, it was in the mid caps.
Well, it clearly was, not only was the mid-cap index hitting a fresh high, which it has, a lot of stocks were hitting fresh 52-week highs as well. So that was a good part today. Let me just drop that list for you. Ashok Leyland, Dish TV, Inox Leisure, Praj Industries, Motherson Sumi, Dabur, all of these stocks hitting fresh 52-week highs and some of them fresh record highs as well. So the going was quite good for many of the mid-cap names. From the double-digit movers, apart from Inox Leisure, which hit a 16% growth. You had Gitanjali Gems, you had NIIT, another 14% up move there. Gati had a solid run today, up 7.5%. Nagarjan Construction was not bad, up about 4%. And Syntex Industries along with Delta Corp also did well. So that was a list of gainers. On the losing end, Karnataka Bank once again 9% lower on that stock. Federal Bank down 7%, Union Bank down 3.5%. A couple of cement names like India Cement were down. Crompton Greaves was under pressure. So it was really a graveyard of banks, you'd have to say. A lot of banking stocks under quite a bit of pressure today. And then you had some of these names like JK Tyres as well that was slightly subpar. But at the end of the day, you felt that it's a day of consolidation. The Nifty just wanted to mark time around that 8600 level ahead of the big event tomorrow, which is not just the monsoon session of Parliament, but a lot of big index companies coming out with their numbers. Just one chart check from your end, Mithil, on Infosys and how to approach that one.
Well, okay. From a longer term perspective or the medium term perspective, 921 and 961 were the make or break levels for Infosys. Those levels are not broken as of now. As long as these levels are not broken, I don't think Infosys is going to start a bear market. Now coming to tomorrow, I think what traders will need to look at is the level at 1010. That is the sacrosanct level, or that is what I call as a Lakshman Rekha. If Infi opens above this particular level, 1010, you will see a continuation of the uptrend, not only for tomorrow, but it will go on for a few months at least, because that will be the resumption of the rally, that the way I see it. If it cannot open below above 1010, and if it breaks 921 and 961 zone, then I think Infosys will enter a bearish phase. Just I want to add one disclaimer that we do have long positions in Infosys at this point of time.
Alright gentlemen, thanks for joining us and taking us through the last 1 hour of trade. It may look like a flat day for the market, but there was plenty of buying action, trust me, on individual stocks. So names like Ultratech Cement, Asian Paints, BPCL also good traction today. But moving on, NR Narayan Murthy says